In trading, breakouts have been my bread and butter, but I know they frustrate a lot of traders. That's exactly what I want to cover in this video today, because for years, I've relied on breakout setups to grow my account and bring me consistent profits. But for many traders, breakouts can feel unreliable. They enter too soon, too late, or they get faked out. In this video, I'm gonna show you why breakouts might not be working for you and how you can flip that around. I've personally used breakouts to pull in thousands of dollars, but the truth is, breakouts can work for everyone. It's how you're trading them. So today, I'm gonna break down the mistakes that I see traders make most often and how you can fix them. So let's dive in. One of the biggest problems I see is traders not having clear rules. You need to define exactly your entry and exit for a breakout. Are you entering on the candle that closes above the level? Are you waiting for a retest? Or are you just taking the impulsive move as it continues up through that direction? Without clear criteria, you're gonna end up chasing random moves and you're 100% going to get faked out more than you like. The purpose of a breakout strategy is to remove the randomness and know exactly when your setup is right and which ones you should be avoiding. You don't buy every little break, don't sometimes wait for confirmation and sometimes not, and don't trade a breakout from a weak level and treat it the same as an A+ setup. You have to track actually what's working, refine it, repeat it, and that's how you create consistency. Another big mistake I see traders make is ignoring context. Looking at a 5-minute or a 1-minute chart as a breakout opportunity, but ignoring the fact that the 15, the 30, the 1 hour, it hasn't broken out at all. So doing a top-down analysis is crucial. I always start on the daily, drop to the 4 hour, the 1 hour, the 30-minute, and the final time frame I land on is the 15-minute to mark my zones. So I'm never trading a breakout at a random zone. There's always a top-down analysis done to ensure that it's an actual respected level on multiple time frames. I'm gonna show you in real time a trade I took yesterday that made me $5,000 using this exact concept. Okay, so this is a breakout trade I took 2 days ago over 8 funded accounts that got me $5,000 in profit. I have a support level here marked out on the hourly time frame. And as you can see here, we have multiple touches of that level, but a fail to break through. So what I seen as I came into my session over here was we're actually starting to approach that level again. So I thought, okay, this is interesting. Let's see how price actually reacts around that level. When we drop back to the 15-minute time frame, this is where the story was actually told. So take a look here. We have the same level, but on the 15-minute time frame. Here are these touch points earlier in the session or earlier in the day. Multiple times it came to that level and rejected off. And here it is again in my session, which was the London session. It attempted to break through 4 times on the 15-minute time frame and failed all 4 times. So I said, okay, this is interesting. Let's see how price reacts if it gets back to that level. What did it do? It rejected off, came up, worked its way back down, and now I was starting to get ready to take my breakout trade. So what actually happened here was this 15-minute candle finally pushed down and actually closed below that key support area. I said, great. If the next candle can wick up and then flip back in the direction of the breakout, I'm gonna enter a sell. But what actually happened was, if I zoom in here, the next candle actually opened up, wicked all the way back up, and then in the last couple minutes of that candle closure, it flipped back down and held below that support level. I said, very interesting. This is actually a better scenario because those 2 candles combined ended up being one 30-minute candle. So you can see this is a 30-minute candle closure below that level. So now I've got a high time frame candle closed below a key level. We have a retest. We have a failed attempt to push back up into the range. Now I'm really ready to take a sell over here. Back to the 15-minute time frame. Once the new candle opened up, I've already been shown that these 2 candles together were a 30-minute candle closure. We failed to break back up into the range, pushed back down and held below. Once this new candle opened up and wicked back up one more time, showing me that it tried to break up into the range one more time and failed. Once it started to break the low of that 15-minute candle there, I had a sell stop sitting there and got triggered into my order. Once I got triggered in, sellers just took over and it melted down. I had a safe spot for my stop loss back up in the range, take profit down nicely, and that was a clean breakout trade that I got confirmation with on multiple time frames. So breakouts are powerful, but only when you treat them with discipline. You need to know where to put your stop loss, put your take profit, and do a top-down analysis to ensure that the breakout level that you have marked is an actual accurate breakout level. So as you can see, breakouts are very powerful, but only when you treat them with discipline. You need to know where to set your stop loss, you need to know where to set your take profit, and how to do a top-down analysis to ensure that the breakout level that you've marked is actually a valid level. Above all, be patient. You have to wait for confirmation. Your job isn't to take every move that happens in the market. Your job is to wait for those A+ scenarios and then execute the trade. And trust me, they do come every day, but you just need to be patient. So if you want to learn how to trade breakouts the right way, avoid the common mistakes, and build a strategy with structure, check out the link in my description.